want to turn our attention back to some of the bigger players on the earnings front because we got results from Tesla, Facebook, and Apple to discuss here. Tesla really the lone wolf there in terms of delivering a miss, and we can kick off with those results here. Tesla, of course, beating on its top line, but missing earnings expectations to come in at 80 cents per share on an adjusted basis. That was still good enough to notch its sixth straight profitable quarter, and Elon Musk also said on the earnings call that Tesla expects to average more than 50% growth for vehicle deliveries over a multi-year horizon. Margins slipped a bit, however, down to 19.2% for Tesla in Q4. That was the lowest level we've seen there since the last quarter in 2019. Kiko?
Yeah, it is interesting to see the pullback that we saw from Tesla immediately after the earnings. But I guess some could argue that not necessarily surprising, just given the run up that we have seen in the stock over the last several months. Let's move on to Facebook, though, because this is what came in much stronger than expected. Total revenue grew by 33% year on year. Ad revenue, a big part of this growth there, was up 31%. And the company said it does expect growth rates to remain stable in the first half of the year. But ad targeting and regulatory pressures likely to create headwinds in the second half of the year. That is certainly something to watch. One other storyline, Zach, that I think is interesting that has been brewing for some time is the face-off that we are seeing between Facebook as well as Apple. Remember, Apple is just about to update its iOS. That update will have Facebook will allow users to opt in to data tracking, but the default setting is not going to allow those like Facebook and other apps to be able to track the activity of the app users. And you heard Mark Zuckerberg sort of raise that issue yesterday during the earnings call, calling out Apple, identifying it as one of its biggest competitors. And he said the company made misleading claims about user privacy, especially around the advertiser tracking. So keep a close watch on that one. But we are seeing Facebook shares up about 0.7%. Of course, the big headline yesterday, when you look at the overall tech earnings, was in fact Apple. And I know you've been looking at that one closely as well, Zach.
Yeah, Apple, the new Facebook competitor, if we are to believe Mark Zuckerberg there. It was a blowout quarter from Apple, revenue topping $100 billion for the first time ever. That was a 21% jump to hit $111.4 billion. Analysts were expecting about $103 billion. The so-called supercycle launch of the new iPhone 12, though, seemed to live up to the hype. Total handset sales were $65.6 billion. That topped the Wall Street estimate of $60.3 billion. iPad sales beat, services beat, devices beat. The lone miss here, Akiko, was really MacBook sales, but even that was a slim miss. Really, I don't think there was anything here you could point to say that it was bad for Apple. And yet, when we talk about kind of these pops in some of the big tech earnings here, it has been the theme that you don't necessarily see a big reward. After all that, Apple shares down more than 1.5%.
Certainly right about that. Let's bring in our first guest on the tech earnings. We've got Bob O'Donnell, who's president and chief analyst at Technalysis Research. Bob, it's good to talk to you. Let's start with those Apple numbers. Double-digit growth across the board here. I mean, these are pretty impressive numbers. What stood out to you? And I ask this in the context of the expectation going in, because iPhone 12 sales were expected to be a significant driver. And yes, in fact, they did deliver in the quarter.
You know, they were, Kiko, but the thing that was a little surprising was how high those numbers were, because there were a number of reports, for example, from the big U.S. carriers earlier in the week, AT&T and Verizon, that suggested that the sales of phones was not that great. But so there was a little bit of question mark of whether or not that super cycle would actually happen, and whether or not 5G, which of course is the main new feature in iPhone 12, would in fact drive those sales. But I think part of the story, of course, that was talked about was that was huge iPhone sales in China. In China, 5G is everywhere. That is the standard. No one buys anything but 5G phones, and they've been waiting for a 5G iPhone. So there was a big jump in China. So I was actually a little surprised at how big the iPhone numbers were. Yes, of course, I knew they were going to be big, but it was a question of degree. And to Zach's point on the Mac, I think the only question mark is, yes, they talked about the momentum of their new M1 chip-based Macs. But I also think that we have to acknowledge that they also raised some questions, because that meant that were a whole bunch of other Macs that didn't have the M1 that people were like, oh, well, maybe I should wait. So my guess, if I'm going to interpret those numbers, is a little bit of people who stepped back and said, oh, you know what, I might wait till, either the second version of the M1, or I want to buy a MacBook Pro. And now that I know they're changing these chips, maybe I should wait. So that's my guess as to what caused a very modest miss there, but still, again, very strong numbers.
Yeah, and I mean, when we talk about that being a modest miss, are you surprised at all to see shares off more than 1.5%? Because I mean, it's a dream. So many companies would pray to have numbers like these, and it's not being rewarded.
Again, and let's, in the context of the conversation you guys just had, let's remember that there doesn't seem to be a lot of logic happening on Wall Street these days. And so you could argue to both sides of this discussion, because you're absolutely right. I mean, obviously, these are unbelievable numbers, over $100 billion in a quarter. Only two other companies have ever done that. I mean, this is just staggering numbers. And while we're in the pandemic, so you're right. But I think the problem is people are pricing all this stuff in. And if anything, of course, Apple, it was a little cagey on, expectations for future growth. So maybe there's a little bit of an interpretation of, oh, well, that uncertainty. They raised a few questions. They said, hey, we're going to start getting some tougher compares because the next quarter's got the beginning of the pandemic, and a lot of people bought a lot of stuff, especially for wearables and things like that. So, I mean, I'm stretching here to come up with reasons, because those are okay reasons, but they're not really explaining what we're seeing versus, for example, in other places on other stocks.
Yeah, Bob, if anything, there were some headwinds for the company in the quarter. When you think about the closures of some of their stores in places like California, they weren't all operating. And then to your point, they did have that strong demand coming in with remote work, whether it's on the iPad or MacBook as well. Let's talk about the services revenue, though, because this is something that Tim Cook repeatedly, quarter after quarter, has said the strength of the company. It was up 24%. How sticky do you think these bundles are getting as Apple expands their services, not just in entertainment, but also in fitness now? Are we seeing real traction on that front?
It certainly seems like it, but look, it is, and Tim even commented on the call. It's still early days for example, for Apple One, which is their bundle of services, because they got asked, well, how much is driving that? What's the baseline service that's really critical? And they're like, we don't know yet. So I think clearly, based on those growth numbers, yes, it is sticky. It is a fantastic long-term strategy for them. They kept talking about their installed base of devices up to 1.6 billion. Over 1 billion active iPhones. That's a lot of people to sell services to. And so I think that's going to continue to grow. They did extend the free Apple TV service. I think that's the one a lot of people have questions about, because, there's so much competition in streaming content and entertainment. But I think, long term, we're going to continue to see them innovate, come up with other interesting little services. And that package, that Apple One bundle, I think, is going to be key to it. And we'll know more next quarter how sticky that particular service is. And I think that's what's going to drive things moving forward.
And really quickly, Bob, this face-off between Apple and Facebook, how significant do you think the hit's going to be for Facebook with this update on the iOS?
I think it could be. I think it could be a big one. I find it kind of laughable that Zuckerberg is claiming that they're all of a sudden a competitor. The reality is they are they have been an enabler, and they may be a disabler of Facebook's capabilities. And the big question is, if Apple does it, then will Google do it with Android? And then will we see this huge move towards blocking people's activity? I think there's going to be demand for that, given the environment that we're in these days, given the change in political situation, given all the concern there is around big tech. I think big tech companies like Apple and Google are going to need to make big steps. And this is one of them. And that would indeed have a big impact on Facebook. So I think Facebook is basically a little scared. And I think they should be.
We'll be watching. Bob O'Donnell, President and Chief Analyst at Technalysis Research. It's always good to talk to you.
Thanks, Akiko.